Thanks for joining us today on Market Call. I'm Morella Fernandez. Greg Newman with us on the show. He's Senior Wealth Advisor and Portfolio Manager in Newman Group, ScotiaMcLeod. He'll take your questions on North American equities and dividend stocks. Here's how to reach us today. 1-855-326-6266 if you'd like to call in. You can email your questions, marketcall@bnnbloomberg.ca. Greg, good to see you.
Morella, great to be here.
So a lot of the big tech companies reporting this week, Alphabet, Meta, who else do we have? NVIDIA's not this week, I'm not sure.
We've got Google, we've got Microsoft, Apple, Amazon.
Okay. What are you expecting? What are investors expecting? Because I find sometimes, unless they hit it out of the park, investors are like, wah.
Yeah, no, that's a great question. I mean, what we're seeing right now is Disneyland for investors. I mean, this is just, everything is just coming out really good. You got the Fed in play this week. That's got to go as the market is expecting. You've got, it looks like a thaw in relations between, Trump and China for rare earths, which is feeding this market somewhat. And, you had Qualcomm this morning, which just blew away their numbers. And you had AMD on Friday, which blew away their numbers. So if these are read-throughs, I agree with you. The bar is very high for this market to continue to go higher. I don't really think that there's a whole lot of risk that these companies are going to miss on these numbers. Where it could get squishy is if their forward guidance isn't quite as good, or if they're escalating costs. That's the thing that I'd worry about a little bit more. But the thing that I'd worry about most this week actually would be commentary out of the Federal Reserve. Like everybody, it's a 90% certainty. Everybody thinks that they're going to drop one quarter, this week, and then maybe, two next year, another one this year. If you hear something that is a little more hawkish than that, I think the markets are priced very richly here, and they could sell off on that. But by and large, I mean, this is just like being cute for the week. It's a real good story. Earnings growth is really, really good here. And
enough to counter tariffs?
Yeah. Like tariffs, this is a nimble administration. And they throw out a big thing, but then, they dial it back. And, Canada, for example, for all the talk of tariffs, 93% of our goods are coming in free trade right now under CLISMA. So, there have been some escalating costs on the tariff side. It's kind of hit demand, which means that the Fed can be in play. So all in right now, it's a bit of a Goldilocks scenario.
Okay, let's talk about the Bank of Canada for a moment. You mentioned the U.S. Federal Reserve are expecting a rate cut here.
Yes. Oh, yeah. We're certainly, they're having better GDP growth than we are. And so we're probably going to do a quarter of a point. I don't know if we're going to need to be more aggressive than that. But certainly, I think that our forward commentary is going to be a lot more dovish for potentially, even though you just had a really good CPI number on Friday and the market really, really cheered it in the United States, it was still 3%, which is still, used to be 2% that we would tolerate. So, I think the Bank of Canada is going to come in line like everybody thinks. The question to me is the Federal Reserve.
Okay. Let's take a quick break. We'll line up some phone calls for Greg Newman of Newman Group, ScotiaMcLeod. He's taking your questions on North American equities and dividend stocks. Back a moment. Let's go to an email to start Market Call today. Jack has written in. He says, what do you think about IGM Financial strategy to grow earnings? What is their strategy?
Oh, gosh. Well, they've got their core business, which has been doing well, for organic growth. But they've been upping their stake in private investments. Like they just did another add to their Rockefeller position, which is a high net worth asset management shop. They first bought in 2023, but 835 million. It's now worth about 1.6. So they've done really well there. So I think that investors are not really ascribing that much growth to these private endeavors that they've been doing. Wealthsimple is another example. of a business that they own that's up about 80% over the last year. And I was just to say, these strategic investments really are not reflected in their share price. So you shake it all out. The stock trades around 10.5 times and growing at around 7.5. Price to growth, not bad. Throw on a 4% dividend. It's pretty fair value. The only thing is I'd say that, technically it's a little bit ahead of itself, and I think you could probably buy it, towards the 20-day average, which would be, a few dollars less of here. But it's a good story.
Okay, good to know. Let's go on to Jeff, who's calling in from Regina today. Hi, Jeff.
Oh, hi, Greg. My question's on Propel Holdings. Just wondering if you like it at these levels. And I guess they're reporting earnings next week. If you would buy it now or just wait till after the earnings. Thanks.
So, this is a great question. What is wrong with Propel here? Why has it been selling off so much? GSY as well.
High at the start of this year. So January was at 42.
Yeah.
Okay.
Yeah. People are really concerned about a weakening economy. There's been a short article that has been put out about GoEasy that there's some aggressiveness with their accounting, that they're kind of extending the loans, that they're not really calling the bad loans. We really don't believe it. But this is really an overhang. And, you're right. The viewer's right. I think that the earnings are in a few days, and we're going to find out. And the way that for these two companies, Propel as well, to prove the bears wrong or the shorts wrong is by starting to show that their growth continues and that their PCLs are really under control. I like it. I mean, last quarter, record originations. We model 31% earnings per share growth and trades at around 12 times earnings. I like it. I would add to it here. This is a small cap stock, though. And look, if I'm wrong about the economy, then I'll be wrong about the stock. But I think the economy's in pretty good shape. And I think their underlying business is in good shape.
Okay. Just out of curiosity, small caps, we saw money starting to flow out of the larger caps and into some of the mid and small. Is that still happening?
Definitely happening. Great question. People ask, what's the difference between the S&P at 22 times now and 25 times in 1999? And the answer is a lot of things, free cash flow on these top companies, but breadth. About 64% of the companies on the S&P 500 are exceeding their 200-day moving average. So money is definitely flowing out, and the differential between the growth rates on the Mag 7 and the rest of the market is starting to narrow, which isn't bad for the Mag 7. It means that the growth is starting to pick up for the rest of the market. So, yeah, small caps are a really good place to be.
Okay, let's go to Pat in Aurora, Ontario, with a question. Hi, Pat.
Yes, good afternoon.
Go
I'd
ahead.
like to ask you a question about Parkland Corporation. As far as their merger with Sunoco, when do they have their... I know that they voted on the merger, but I've been trying to get a hold of Parkland, and I was not be able to get investor relations or anybody at Parkland to give me some information as to when I can accept it and how I can accept the $44 strike price.
Okay. I'm not sure if you have that kind of detailed information on Parkland.
So, no. I mean, I know that the deal is expected to close in Q4. And, we just in case the deal doesn't close, I think we have a price target of $41.50. It's got to still pass regulatory approval and that kind of stuff. But, this is a good story that we thought was going to get taken out. We thought it was going to get taken out a couple of years ago. But here it is now. In the meantime, it's paying you a nice dividend, and we continue to own it. And be happy to answer the question next time I'm on the show.
Okay, I have a couple of details that I did pull up. So the deal will close on the 31st, so this week. And Sunoco announced on November 3rd, the common unit of Sunoco will be issued to Parkland shareholders in connection with the transaction. So a few dates out there that should all be happening within sort of this week and into next week. Pat, I hope that helps you answer your question. Let's go to Ted in Newcastle, Ontario. Hi, Ted.
Hi, Greg. With Gibson's recent pullback, do you think this is a good entry point? They also like the dividend, so I'm just considering getting into that field. Thank you.
Okay, thank you for the question.
I think it's a great question. I think if you're going to put money into the TSX and you shop around right now and you're looking for areas that have really a good risk reward, I think the energy infrastructure sector looks really, really good natural gas tailwinds. Gibson sold off a little bit because there's a few less catalysts we see, and we went from a sector outperform to sector perform. That said, still really nice growth, 10 to 11% at a market multiple, at a multiple that's a lot lower than its peers, trading around 14 or 15 times with a nice dividend. I like it. I mean, I saw that it was on towards Friday. I think it was in the 23s. Yeah, add to it in the 23s.
Okay. We are going to take a quick break then. We will line up some more phone calls and questions for Greg Newman, Newman Group, ScotiaMcLeod. He's taking your questions on North American equities and dividend stocks. Back in a moment. Welcome back to Market Call. Let's go to Chris. He's on the line in Delta, BC with the question today. Hi, Chris.
Oh, good morning, Morella. Thank you so much for taking my call. Greg, I'd love to have your opinion on Pembina Pipeline, and I'm going to be cheeky and ask if you could also share maybe just a few thoughts on any strategies, or if you don't do it all, in terms of incorporating leverage. About 6 years ago, I borrowed to buy Enbridge when it was yielding 10% and rates were effectively zero, I think 1.5%, 1.75%. And of course, it's not that same screaming buy as it was before, but essentially it's worked out. And I'm wondering if that is something that you use, any words of caution, any sort of guidelines you would have. Thank you so much. Take care.
Thank you for that question. Let's start with Pembina, if you don't mind.
Yeah, this is a great question. Number one, Meta. Meta is involved to build a massive AI data center near Edmonton. This could really help Pembina long term. We see it as being 1-2% accretive, given our assumptions. This stock has got about a 10.1% free cash yield, 57% payout ratio. So this nice, rich 5% dividend that you're getting, you're going to continue to enjoy with dividend growth over time. And it trades at a reasonable PE. So it ticks all the boxes right now. I'd buy Pembina. In terms of your question about leverage, wow, what a great question. So look, it's not for the faint at heart, and I'm going to tell you why. So many times people decide that they want to borrow to invest when markets are really good. Mm-hmm. And then all of a sudden, markets turn down. But yet, the debt that they borrowed doesn't go down. The debt that they borrowed continues to go up. So at some point, a lot of people that aren't familiar with that, and really, really used to it and ready for that, they have some sleepless nights, and maybe they end up selling at the wrong time. And one of the reasons why you see markets overreact so bad, people ask me all the time, well, why is the market off so much and so sharply? It's usually leverage unwinding. It's usually people, hedge funds, that got crowded, they're going to lose their jobs, or sometimes it's individual investors that didn't really understand the use of leverage. However, if you use leverage properly, my goodness, it is so accretive if you know what you're doing.
So is there a rule of thumb for a retail investor?
The biggest rule is common sense, is don't get it over your head and understand what you're doing. But if you, not that I'm giving any sort of Revenue Canada advice, but if you can borrow to invest, which is Revenue Canada bonafide deductible, and you say it's 4%, you got to remember interest rates can go up. That's another risk. But if interest rates can stay where they are or even go down in maybe this environment, and on an after-tax basis, if it's 2% your cost of borrowing, and if you're getting 5% from Pembina, and if you see the earnings per share growth and you believe that the stock has got 10% per year that it should grow over time, then it's a very good formula, and it's the way people can really build wealth, and it's why people do so well in real estate. Most people don't end up owning everything. They piece it in, and the bank takes back, and then over time they. So it's the same thing in the markets, but the problem with the markets is there's so much liquidity, and it can really shake people out.
Yeah, it can turn pretty quickly. Okay.
Yeah.
Let's go to Steve then in Parry Sound, Ontario, with a question. Hi, Steve.
Yeah, hi there. I'm just calling about your guest's opinion on Constellation Software and their two spin-offs, Newman Group and Topicus. They've all taken a beating lately, and I'm hoping it's nothing more than just a great buying opportunity.
Okay, thank you for the question. Let's pull up Constellation Software. There we go. So it's down 9.9%, almost 10%, we'll say, over the year. Great company, moves to buy other companies. Software, I think, is the question right now, right?
Yeah, so listen, they, number one, software has taken a backseat to AI. So that hurt it. Then they had a CEO issue. That hurt the stock. Yes, the viewer's right. Lumen and the other one, I can't remember, you just said it.
Topicus.
Topicus that they spin out. Very hard to get coverage on these stubs, but every time I do get a chance to look at them, they've done incredibly well for investors. I don't know if there's anything wrong with either of them, other than the fact that I think that there's a lot more competition for growth stocks out there right now. And CSU, I think the business model is still good. I think that you could probably buy it at these levels and be quite comfortable over the long term.
Okay. Steve, I hope that helps you. Let's go to John in Hamilton, Ontario, with a question. Hi, John.
Oh, hi, and thanks for taking the call. I'm a dividend investor. I tend to go with aristocrats, one that have been around for a long period of time. I'm looking for an infrastructure utility kind of stock, adding to what I have now. I'm looking at AltGas or ATCO, and I would like your opinion on these. Do you own any of them? Do you see if any of them fit into Carney's plan for infrastructure development? So I'll sit and listen, but I appreciate your feedback.
Okay, so quick question, Greg, because we talk about energy and the power needed for AI build-out and to run AI. Do you have a preferred energy sector that you're looking at, or are you sort of just big on energy across the board?
Well, this is a great question. If you're looking for companies that can benefit from the thirst for more power, I mean, we just talked about Pembina developing near Edmonton, but really it's more Capital Power, TransAlta. These would be the Canadian company, Brookfield Renewable. These would be the companies that can kind of feed into that growth in terms of which stock is better. ATCO, which is really Canadian Utilities, the parent of it, versus AltGas, which one can fit better into Carney's vision. I think it's AltGas because we're developing nation projects. And what we're really trying to do is get, amongst other things, natural gas offshore. And they really help feed into that theme, AltGas. And so if there's one stock that I think is relatively, reasonable relative to its peers, I just mentioned Gibson. The other one would be AltGas.
Okay. Let's leave it there for this block. We're going to take a quick break. We'll have a look at Greg's past picks when we come back. Welcome back to Market Call. Thanks for joining us. Let's get to past picks from Greg Newman from November 8th, 2024, so just under a year ago. At the time, Greg, you picked Citigroup on the New York Stock Exchange for $68.63 US. It's now up to $131 US, 46% upside, total return at 49%. Is this a stock you are hanging on to, and what did you foresee with Citigroup at the time? Do you remember?
Yeah. So at the time, it was just cheaper than it ought to be. It was under-owned. We were looking for return on tangible common equity improving. This was a transformation story. So you got to understand that a lot of other banks, like JP Morgan, have ROTCEs, 15, 16, 7%. These guys, we're trying to get to 10, 11% for these guys. So it's a real turnaround story. So that was part of it, number one. Part of it, number two, was the fact that I'm not sure if Trump had won at that point or not, but tailwinds for the banking sector were starting to come in line. So it was a combination of, like the banks, what was your cheapest, best play with some real good torque. And, at the time, it was really cheap with about a 26% growth rate at around 7 times. Well, guess what? It's now 26% growth rate over the next few years at 10 times. So this is still a bit of a no-brainer.
Okay, so you still pick it up at this price?
I would buy it, yeah, for sure.
Okay. All right, look at your next fast pick, which is Uber Technologies. Uber on the New York Stock Exchange, $72.04 last November, and now up to $95.84 US, so 33% upside. Total return also 33%. Uber, couple of things. Do they have room to expand? Is it a stock you're holding on to as a result? And how threatened is that model by Waymo or robotaxis or anything like that?
Yeah, no, that is a great question. And that was the fear last year, what brought it down or why it wasn't higher. The fear was that, I think at the time, the fear was that Tesla was going to do self-driving cars. And,
and it was imminent at the time.
Right, and who would call Uber? And the thing is that they're not just, they're an intermediary service. They're, so they have the market in that. I mean, there's other guys that are going to come in, but the market is huge. And, they are a brand name like Kleenex. I mean, if you're going to go and call a taxi, you might call a taxi, but you're going to say, I'm going to call an Uber. And, but they're involved with mobility. They're involved with freight. This stock was cheap at the time relative to its growth rate. People were fearing just what you explained. They got this really nice buyback. I mean, there's some knocks in the stock. I mean, their debt load is slightly higher, but by and large, the stock has got way more in the tank.
Okay, so let it run is what you're saying.
Let it run, and you can buy more on off days.
All right, let's go to Brookfield Infrastructure, which is BIP-UN, 47.64. At the time you recommended it, it is now up to 47.88, so a 0.5% total return of 6%. Brookfield Infrastructure, just expand on sort of whether you think it lived up to what you thought it was going to get to, and if it hasn't, why?
No, of course. Because I bought it a little bit high, number one, and everything doesn't always have to go up in a straight line, it's paying me to wait, which is really nice. They've done everything right. They did everything right. Why isn't the stock cooperating? It will. Their last quarter was in line. They've been very successful at buying assets at good prices, selling assets at high prices, very strong organic growth. These guys have got inflation-linked revenues, organic backlog, large organic backlog, and robust deal pipeline. I bought it last year because they're trading around 10 times with a 14% growth rate. Still the same. And, so you can buy this name and you don't have to take a big risk with this name. You're going to get your 5% distribution. You're going to get your distribution growth each and every year. And over time, the stock will go higher as well, nicely.
Out of curiosity, how big is their renewables part of this company? I ask because we know the Washington administration not big on it.
Yeah.
We've seen some pullback in that space.
So that's a great question. But that would be a good question for the parent, which is Brookfield, BN, because they've got these different stubs. And this one is the more infrastructure play, but they do have the BEP.UN, the energy partners, which was, Morella, in the penalty box for a long time because of exactly what you said, because the bloom was off the rose for the renewable energy sector. But lately it's really caught a bid on the data center thirst.
Okay, we are going to take a quick break. Then we'll be back with Greg Newman to answer your questions. He's taking your questions on North American equities and dividend stocks. Back a moment. Welcome back. Thanks for joining us here on Market Call. Let's go to Alfred. He's on the line in Mountain View today. Hi, Alfred.
Hi, good morning, Mirella. Thank you. Great show. We love watching you here in California. So my question is about Berkshire Hathaway. What's going on with the stock? Other than Greg Abel taking over the helm, everything that I read about the company is good, but the stock doesn't seem to be performing well. I am a long-term investor. Thanks.
Okay, thank you for the question. And it has been lagging. It dipped in sort of late April is what it looks like, and it recovered a little bit. Now it's kind of going sideways. Any particular reason?
You know what? Listen, Warren Buffett and company is not playing day to day, and they're not playing quarter to quarter. They're playing for the long term. And so, some of their companies like Coke just, did really well. And, it's up 7%, I think, year to date or year over year. It's not bad. It's going to go at different speeds. Do I think this is the most exciting place to put new capital to work, given what's going on in the market? I mean, I don't want to have pom-poms here. I don't want to be a cheerleader, but we're in a time of amazing innovation. So capital is going to places that it can figure out as being best risk reward. And, like Citigroup, I think is just an obvious example of that. And some of the Mag 7 names that are cheaper than they ought to be. So this one is just average right now. So that's why. But the magic of Warren Buffett has been proven. He doesn't manage day to day, quarter to quarter, and stocks move up and down.
Do you think that perhaps people, and you touched on this, moving away from the steady Eddie stocks or steady Eddie investments because they're looking for so much growth? They're trying to get in on the growth from AI?
Yeah, for sure. And, that's always a risk at some point when people leave, the steady Eddies to kind of lunge into growth. And, they go into the Bloom Energies, or they extend beyond the frontier, or they, overdo it on the NVIDIAs where it gets way too expensive. But NVIDIA, they haven't overdone it yet. It's still price to growth. It's still fair. But they've overdone it in some areas and some stocks for sure.
Okay. Let's go to Bob on the line in Toronto with a question. Hi, Bob. Bob, are you there?
I'm here. You hear me?
We can hear you now. Go ahead.
Okay, a great show. Thank you very much for taking my call. Greg, I'm just wondering your thoughts on TC Energy. I am in the green for that stock, but it has lost about 10% over the last month or two. So I'm just wondering if you think it's a good investment to buy now. Thank you.
Okay, thank you for the question. TC Energy at about 70.32 today.
Yeah, listen, I mean, yes, it's maybe pulled off a little bit, but look at the run that it's had over the last couple of years. Couldn't get off its back for a long time. They've got data center project announcements. We talk about companies that are benefiting from that in the power space. They're one of them. Attractive mix, highly contracted asset base, visible growth. They do trade at a premium, but they warrant a premium because of their growth visibility. Management is confident in their new growth projects. Trading at around 18 times 2027 with about a 4 or 5% growth rate with a nice dividend. Is it suitable to buy it here? Wrong words. Yes, it's definitely suitable to buy it here. Would you buy? Yeah, you can buy it here. But I think that I would rather go with a Gibson Energy or an AltaGas, which I think on a price to growth are more compelling than TC Energy at these levels.
Okay, good to know. Let's go to our next question. It's in an email from Fair. Would you buy MSFT, so Microsoft, before earnings reported on Wednesday? I always find this an interesting question. This is from Frank. It says from Muskoka here. I always find this interesting because people want to know ahead of earnings, should they buy in on something?
Yeah.
And is there a rule of thumb for you for that?
Wow, what a really good question.
Well, because they think it's going to get a bump, right? They think it's going to get the bump. They want to run up that bump.
My general rule of thumb is I do have a rule of thumb, and the answer is I don't.
Okay.
I don't speculate on, the markets are, there's a lot of different analogies, and you can play them different ways. But, sometimes people try to say markets are a bit of a casino or something, but they're not. I mean, when you're investing, you are the house. Time is on your side. What you really want to do is try to buy, good assets at the right price when they're kind of underowned and a little uncrowded. I would be lying if I told you I had the inside into whether, Microsoft is going to beat the Whisper number and whether it will be good enough. I mean, I could look at the options market and I could see what it's implying. Sure. But I don't like to play that way. I mean, I just want to answer the question, should I be owning Microsoft and should I be picking it up and accumulating it at proper levels in the chart? And, that's the way I'll go at it, not getting in front of earnings.
Okay. Let's get to our next caller then. Chris is on the line. He's in Calgary today. Hi, Chris.
Good morning. My question is with regard to Chemtrade Logistics Income Fund. Just wondering what you think the upside is, given they've already had a pretty good run. Thank you.
Okay, thank you for the question. Chemtrade Logistics.
Well, we did upgrade it to sector outperform. They did another acquisition, Polytech, which drove the stock, and they raised. Their balance sheet is in good shape. Valuation looks good. And look, I agree with the viewer. I think it's had a pretty big move here. I think that you're going to get paid this really nice distribution. Don't see a lot of growth out beyond 2027. Balance sheet is good, though. And listen, I've been negative on this stock every time I've gotten a question on it for the last few years, and I've been wrong. So appreciate. Don't know everything, that's for sure.
Okay, let's take a quick break. We'll line up some more phone calls for Greg Newman. We're back in a moment. Stay tuned. Welcome back. Let's go straight to a phone call from Gulam in Toronto with a question. Hi, Gulam.
Hi, good afternoon. My question is on TELUS. I have a small holding in Bell Canada, but that took a little bit of a drop after the dividend cut. Now, I was thinking of adding or buying some TELUS. Do you think it's a good idea? And if so, which one would you prefer, Bell or TELUS? I'd appreciate your comments.
Thank you for the question. Just a reminder that Bell Canada is a parent company of this channel under the Bell Media brand. Telecommunications, right? Like a harder hit space these days.
For sure.
Do you like any of them for
investment? Listen, I think that this is a really good question. They got to sell. Towers. They've got to really improve their balance sheets. These companies. TELUS didn't fall in the same hard times. They still got 17.5 times 2027 with an 8% growth rate.
Dividends still solid.
Dividends solid. But BCE, it's really got to prove it. They did this acquisition in the States. They've got to prove out those numbers. They've got to get their leverage down. But wireless, which has been bad for a long time, is starting to turn. Landline is starting to turn. It's going to take a couple of years for this to show up, maybe several quarters, maybe 3 or 4 quarters for this to really show up in their financials. But I think these stocks have turned the corner. And so I think that you can buy BCE. And I would say the same thing for Rogers, except for the fact that Rogers has got way more debt because they're doing this whole MLSE thing. But if they
concentration in sports.
Right. But if they execute on that, right, then that's another $5. You want to buy it when there's fear. And look, for all the talk about markets being so expensive, there's, opportunities like BCE and TELUS right here. So they're both good.
Okay. Let's move on to Amin in Ottawa with a question. Hi, Amin.
They got way more debt because they're doing this whole MLSE thing. But
hello.
Hi.
Hi. What's your question?
My question for the guest is the Canadian market overpriced now? And is gold in a bubble? Because it has been going down. The trend is down for gold.
Okay. Thank you for the question, Amin. Gold futures here at just over $4,008. We had a high recently, I think it was about 4,400 or thereabouts. I should look that up. But what's your take on gold and whether that trend, sort of the movement down, may continue?
Well, first of all, on the TSX, the first question, earnings per share growth estimates are rising for the TSX, and we're still a cheaper market than, the U.S. So all things being equal, I don't think the TSX is overvalued. On gold, gosh, I mean, it's a fickle thesis, gold. Gold is not really supply and demand the way most commodities are. It is how much value should be ascribed to it. What is the investor appetite for it? And it's similar to a Bitcoin. And so I'm not saying that it's not a meritorious story, because, it is, and gold is enduring, but at what price? And, obviously the themes are instability, and the themes are central banks buying and China appetite and diversifying away from the US dollar. But at what point does it get overdone? And, I don't know that anybody can really answer that. I wouldn't play the metal. I
was going to say, would you buy in at this point?
I don't play the metal, but what I do is I play the stocks that are cheap relative to history of where they should be on a bullion to stock value. So I give ourselves the edge that way in terms of if gold doesn't go straight up, or if gold even goes down 500, there's still value here in these stocks. But at these levels, the stocks are kind of overbid too. So is gold in a bubble? Nobody knows. We're going to have to wait and see.
All right, let's get to one more question. Robert in Burlington with his question today. Hi, Robert.
Hi, Greg. I'm holding a substantial position in Well Health right now. I give the company 10 out of 10 for a growth company, and it's in a segment that's not just broken but busted, and they're doing a great job. There's a lot of news to come out in the next 6 months. What's your thoughts on Well Health?
I think you're going to be rewarded, my friend, and I think that, markets are not always truth tellers. I mean, they don't get things right in real time all the time, and that's why there's opportunity in a lot of small caps like Well Health. Add to that maybe even boring old names like New Flyer or Air Canada or, Cargojet. I mean, there's a lot of small cap names on the TSX that are just fine. These guys beat on Q2. They affirmed their 25. They beat in their Canadian clinics. They've got some softness in the U.S., but it's at a pretty attractive valuation at 8.9 times 2026 EBITDA. All in, I'm a buyer.
Okay. We hope that's good for Robert. Let's go to Faisal, who's calling from Toronto. Hi, Faisal.
Hi, Mirella. Good afternoon. Hope you're doing well. Greg, as I said, I sound like a broken record here, my friend, but always good to see you on the show. Mirella, you've got one of the most knowledgeable and stable voices in the industry sitting on the guest chair here today. Greg, I need your opinion on Capstone Copper. If you're not positive on it, if you have an alternative, and generally, are you positive on the copper market? I'll hang up and listen, and thank you for taking my call. Bye-bye.
Okay, good question about copper, which is going to be in need, obviously.
Yeah, so everybody knows copper's in need. Everybody knows that they've underbuilt mines for years. Part of the green build-out, part of the green future, part of data center growth. Copper fits all the boxes, and at $5.15 today, copper, I think that it's going higher. Capstone is one of the really good companies in the space. They just partnered with Santo Domingo as a joint venture, which really de-risks their future growth, and on good terms, favorable terms in terms of the transaction. They got $300 million in proceeds for it. So, and they got a future option to buy back a 25% stake. Shake it all out. This is not an expensive name, trading around 14 times 2027. Huge growth from 24 to 26. A little flat after that. But if you're going to put money into the copper names, this is in Canada. This is one of your best names.
Good to know. Let's take a quick break because we have new topics coming up from Greg Newman. Stay tuned for that. Join us tomorrow on Market Call. Brooke Thackeray will be on the show, research analyst at Global X. He'll take your questions on seasonal investing and technical analysis. Time now for new top picks from Greg Newman. We're going to start with iShares U.S. Aerospace and Defense ETF. So this would have all the big American defense companies in it. Why are you going for an ETF in the space?
Okay, so, I have a rule. I like to get the most return with the least amount of risk. And sometimes I can do that with stocks, and sometimes I can do that with ETFs. And there's a wall of money, just a wall of money that's going into defense, from Golden Dome in the United States to German spending to Canadian spending. And we've just seen how effective U.S. defense complex is with wars that we've been watching. Sadly, there's wars, but we see how well they're working, and we see how well the Russian stuff or the other stuff is not working. Everybody wants this stuff from the Middle East. Just recently, last week, I think, on Q3, GE, Northrop Grumman, RTX, Lockheed Martin, all cite higher demand. GE raised full year and says defense spending is up 84% year over year. Northrop Grumman sees unprecedented demand in the U.S. and around the world. Golden Dome will be a major growth driver. It is pricey around 27 times, but there's more to go. And if you want to do it in the Canadian market, you can buy XAD, which is the same thing, but domiciled here in the TSX.
All right, let's move to your next top pick, which is Financial Select Sector SPDR Fund XLF in New York. And so financial, same idea, playing across the board.
Money is just coming in, wall of money, and again, not as sporty to be with an ETF. But look, if you want to buy an individual stock, you can buy Goldman, you can buy Visa, you can buy Citi. They're all good. But a wall of money and M&A activity is just huge, and the deregulations in this space. So also a really big beneficiary of AI that we're seeing on the numbers in the bank stocks. And they think that they can really grow without adding headcount.
In fact, they'll probably get rid of people, is what it feels like in the backroom offices.
Yeah, hopefully not. Hopefully not. But there's also an appreciation for banks recently that they have this counter-cyclicality aspect that when things go wrong with the world, like everybody repositioning their portfolios in April, there's a lot of trading. So that maybe banks should reflect that with a higher multiple. I think that this sector is very reasonably priced, around 16 times versus the market at around 22 times with similar growth rates. Even in Canada too, the Canadian banks, ROEs are improving. Very good risk reward buying the sector.
Okay, let's get to your third pick then, which is iShares Russell 2000 ETF, IWM. Why the Russell?
Well, first of all, it is very cheap relative to the market, number one. Number two, breadth is widening, as we talked about earlier, where 64% of S&P companies are trading above their 200-day moving average. Canada, tons of small caps, which are cheaper than they ought to be. This is really the Russell because it's frustrating if you buy New Flyer and it doesn't happen in a quarter, or it doesn't happen in a year, or Russell, or Cargojet, or AC, and they're all good. And if you have if I could have like a bunch of choices, I would be including those as well. But this is, I think, a very good diversification tool. Many people are very overexposed to big caps. Many people are very overexposed to the Mag 7, which they can continue with because they're still going to do well. But this is an area that is long underperformed and over time tends to outperform because they're smaller companies. And the sweet spot is that rates are coming down and they have a lot of floating rate debt. So it really is a good economy, better than you think, most people think, with lower interest rates and diversification.
And just quickly remind us why at some point you choose an ETF over the actual stock.
So that's a great question. I'm a stock picker, but in the end, what I am is about efficiency for our clients. And there's times where we're just, what I try to do on the show is reflect what we're actually doing and what we're buying. So these are areas that we think have a really nice risk reward, that are just cheap relative to their growth rate, and are offering people diversification.
Okay, we do have to leave it there. Greg Newman, good to see you. Thanks for coming in.
Thanks, Marilla.
And we will see you again tomorrow on Market Call. Thanks for joining us today.